Good morning, traders. Today is Thursday, and here's your market briefing covering the US dollar index, WTI crude oil, spot gold, and the euro dollar pair. So let's start with the US dollar index. The index slipped further below the $98 mark on Wednesday, extending its two-day decline. This comes as safe haven demand softened amid a tentative ceasefire between Israel and Iran. While there have been isolated clashes, the broader truce appears to be holding, helping the oil prices cool off and inflation fears ease. However, uncertainty remains. The intelligence report suggests that the recent US missile strikes only partially damaged Iran's nuclear infrastructure, meaning the threat hasn't been fully neutralized. On the monetary front, Fed Chair Jerome Powell reiterated a cautious tone, noting that the interest rate will likely stay on hold until the inflationary impact of new tariffs become clearer. And despite this, the market pricing still reflects about a 20% chance of a July rate cut. And technically, the dollar index is hovering near a two-week low around 97.7. The key support lies at 97.61, followed by 97.22 and the psychological 97 level. The resistance is now forming at 98 and 98.55, which is the 14-day moving average. The RSI stands at 38, suggesting a momentum is oversold, but not yet signaling a reversal. Moving to crude oil. The crude oil continued its slide, falling for a third consecutive session to trade just below $65 a barrel. The markets remain skeptical about the durability of the Iran-Israel ceasefire after reports of renewed strikes from both sides. A US intelligence update noted that Iran's nuclear ambitions have only been set back a few months, leaving the door open for a further conflict. And meanwhile, the US crude stockpiles post a sharp weekly drop of 4.828 million barrels, well above the expectations. While this suggests tightening supply, the market appears more focused on geopolitical developments and the broader demand signals. The IEA still maintains an emergency reserve of 1.2 billion barrels, and some OPEC members are starting to raise output again. And technically, oil is facing pressure below $65. A further decline could test support at 63.65 and 63. And on the upside, the 200-day moving average at 68.34 and the psychological $70 level will be key if the price recovers. Now, let's talk about gold. Gold saw a modest bounce on Wednesday, trading near 33.30 after rebounding from below 3300, which is its lowest level in 2 weeks. A pullback in US Treasury yields and a softer dollar helped support the prices, although investor sentiment remains cautious amid optimism over the Middle East ceasefire. Despite a short-term uptick, technical signals lean bearish. The recent drop broke an ascending channel pattern, and momentum indicators are starting to turn negative. Resistance remains capped near 3360 area, which is the 14-day moving average, with key upside levels at 3397 and 3400. And on the downside, a firm break below 3300 could expose gold to a further weakness towards 3271 or even 3245. And last but not least, euro dollar. The euro extended its rally on Wednesday, climbing to 1.1665, which is its highest level since October 2021, driven by improving risk sentiment and persistent dollar weakness. The easing of tensions in the Middle East and growing market expectations for Fed rate cuts are fueling the move. And Fed Chair Powell's comment offered a little pushback against the dovish expectations, while President Trump confirmed a US-Iran meeting is scheduled for next week. Still, he warned of further strikes if Tehran resumes nuclear development. And technically, euro dollar remains bullish. The pair has broken above the previous yearly high at 1.1642, and RSI is holding firm at 67.5, indicating continued momentum. The next key resistance sits at 1.17 and 1.18, and on the downside, watch for the support at 1.16. So to wrap up, the markets are cautiously optimistic as the geopolitical tensions ease, but the risks still linger beneath the surface. Traders continue to monitor Fed signals, oil supply shift, and global macro data to guide positioning. So thank you for watching. Stay sharp and trade safe.